Hey, welcome everybody. We just wanted to give a quick Algo Optimizer update, what the signals look like for this summer market environment. If you would take a moment here to read this risk disclosure. All right, trading does involve risk of loss. All right, so first thing I wanted to talk about was this position that we have on with the Algo 16 Optimizer. It is in a crude oil trade. A couple really neat things about this trade. First and foremost, I mean, a lot of people think you get into a trade and you make money immediately. And, sometimes we do what's called the word probing. You get in, you get a nice setup, a signal, the market broke an uptrend. If I could draw the straight line, you could see the uptrend, but it's tough for me to do that off a mouse drawing tool. So here's your uptrend. It breaks the uptrend, it goes short, and the red line loses money. It does it again, another uptrend, but this time it's a low close doji. As you can see, it says LCD. It's short 2 positions. And what's neat is that this is designed to get you in, and you know what your risk is, which is the red. And as the market starts to move closer to its profit target, orange is a trailing stop function. So as you can see, it's out of half the position. It says out of short 1, profit target on 1, short 2, which means what? We're still short 1. So this has been a trade that we've been short from 17, and again, that's 68.17. Look where we're at right now. Now, what it does is as it moves off the trailing function, it now just established a brand new trailing stop feature. So that whatever happens, if this market zings all the way back up, it's going to stop us out at that orange line. And that is the dynamic function of, if we go over here to format, you could see person algo 16. So I wanted to make sure everyone knew I was using 16. The properties here, well, let's take a look of the function of scale out. Now we can scale out of half, we can get out at the profit target, or we can get out of nothing and just trail the stops, which would be nice on a day like today, right? But more times than not, we see the market get a profit target, and then it kind of clicks back up, and then it trails the stop, and you'll get stopped out with at least a good average profit. And that's the thing about this. You can also override it, but right now, or use it as a tool to say, gee, should I be buying the market? Well, I wouldn't buy this market until A, we got a buy signal, or B, and or the shorts all are covered. So I just wanted to kind of point that out first and foremost. Now let's look at an S&P trade that this system picked. All right, so this is the same situation. Couple trades today, probing, not really all that efficient this morning. Got into a buy, stopped out. Got in a sell, stopped out. Got short, stopped out. But now we've caught the trend. It got long, made a nice trade so far. It's out of half, and what is it doing? It's still in a long position. It'll stay long until a couple things happen. A trailing stop function in triggers on a downdraft, or it max holds out after so long of a period in the trade. Currently, it's got its trailed stop is right there, that little red line in the sand. So whatever happens, if the market from here pulls back and crashes in the lunch hour and just completely reverses, it'll get out of the second position. So, I mean, in a summertime market environment, this is kind of a nice product to have working for you, at least from most traders' perspective. They feel that they have to get into the trade or they're missing the trade. And, I think another thing is they feel that it can't go any higher. Well, if you wanted to sell the market, just like I said inversely with crude oil, if you wanted to sell the market, I wouldn't want to sell until A, we got a sell signal, or B, it's out of its long position, which so far it's not. So let's take a look at other things here that we talk about in the market as far as analytics are concerned. Looking at the advanced decline analysis, this is kind of interesting in the sense that, number one, the breadth of the market is extremely strong today, 447 versus 54 in the advancers in the S&P 500 versus decliners. Here's the NYSE, and you can clearly see the breadth of the market. This V means the advanced decline is recouping pretty much all of yesterday's downside action. All of this on the heels of weaker crude oil. That's what's kind of cool. And the headline news with this Turkish lira issue. Quite frankly, I don't I don't know if the market really cares about that right now, because here is an interesting market, which is the small cap Russell. It has this kind of like wider triangle or wedge pattern right here, and you can see the wedge pattern's also indicative of its advanced decline. So if the advanced decline starts to break out, what does that tell you? It tells you that the market, if the advanced decline leads and we see more stocks increasing, this is giving us the hint that perhaps we're going back into buying domestic growth stocks in the Russell relative to anything else. So I would have to say earlier I was a little concerned because we have this little rounding top pattern in the the Nasdaq Composite. We don't seem to be able to get any momentum behind the breakout in the move. Also, we see a flat top here with the breadth in the Qs, the advanced decline, which means the market's kind of stalled. But, it just definitely signals you can't be too aggressive long. You have to have exposure to long side, and you shouldn't be short the market, not yet. So that's what we're looking at, and that's kind of how we're positioned using the weekly thoughts and observations, which is our weekly advisory service. In fact, if I may, just go through here a couple positions that we have. Some of the things that we're positioning for, or what we've been talking about, is I still want to be in some of the staples. I think there's still a few things that we need to address as far as the markets has an increasing over the last 3 weeks, new 52-week highs. 3 weeks ago was 97, last week was 105, and then we closed at 142. So we track the ratio of new highs versus new lows. I also like to look at the overall advanced decline analysis in the different tools that we have. So between individual comparative ratio lines, the McClellan oscillator, new high, new lows, these are some very distinct indicators to give us an edge into whether we should be net long short, or maybe what sectors are kind of weighing in on the marketplace right now. This is our advisory service, weekly advisory service called Weekly Thoughts and Observations, and I think we put it all together with this package here from TradeStation, which is our lifetime. Our current market analytics suggest for this week, if I may, look at the earnings that are coming out this week. NVDA is kind of like an interesting, because it's already up $5, nearly $5, $4.92. By the way, here's our positions right here. A GE trade's not working out well. OIH, IYZ, which is in the uptrend, breakout. That's the telecom. I think there's a lot more good things potentially coming. As you can see, I'll just bring up the good news here, and then we'll talk about the good, the bad, and the ugly, right? So the good news is we have a market that is starting to break out and hold its head high above the resistance breakout. So what's the resistance breakout? That line in the sand broke out, and it's maintaining that breakout. So there is, a long-term downtrend in telecoms. It's been a long time coming, but now I think no one's really paying attention to it. I watch services that may be seeing some uptick in fees with AT&T and Verizon, that kind of stuff. I'm just saying. Maybe perhaps that's why Apple's done so well. But here's one of the things I want to point out. NVIDIA. NVIDIA being up as strong as it is the only stock in the pack. It's defied gravity. And the relative strength, the person's market catcher, is improved, and the volume's moving up in that direction. So I think that NVIDIA, despite the fact that cryptocurrencies and mining is less of a thing right now because of the expense, NVIDIA seems to still maintain a very bullish structure, technically ahead of its earnings report. So they definitely are leading the pack to the upside, and the relative strength is improving. So these are all positive aspects of the market, which if it's rallying ahead of earnings, there must be, maybe there's a little leak, or at least the idea that we're going to rally and get through 270 or take out that peak high. That's what it appears to me. So when we look at the semi-sector, gang, and I'll just go up to the person's lifetime package, we're going to go all the way back up here and get to the semis. Look at the majority of the stocks in this space. the person's market catcher is all red, which is not good. It means it's lagging behind the overall market. Everything's in a daily bear trend, PPS sell signals, and it's in PPS sell signals on the week. So, I mean, if you just humor me here, look at without getting up into every single chart. When I click on a chart here, a symbol here, it reflects in the charts below. And you can see this is the weekly chart right there, weekly. The weekly trend is down on Micron. NXP semiconductors, look at that weekly trend, down. Microchip, look at that weekly trend, down. Ubiquity Networks or Ubiquity Networks is not really a semi, but I kind of follow it in that space. But Intel, certainly, I don't know what you want to call Intel. Is it a chip manufacturer, technology? But either way, it's in the semi space, it's down as well. Ambarella, it's down as well. So Avigo, Broadcom, it's down as well. Applied Material, it's kind of sideways. It's been down since June, as you can see. The trend is lower. And then you get AMD, which is breaking out to the upside. So there's two names, AMD and NVIDIA. Those are the two names that are to the upside. So the space is down, the sector is down. Only two companies are on the upside swing here. And so it leads me to believe that maybe NVIDIA will catch up a little bit better and continue its breakout to the upside and have one big final hip hip hurrah hooray type of blow off. I've got 297 as an upside person's quarterly pivot. I don't know if we're going to get there, but if we take out that high, I would suspect 275, 280 is in the works for NVIDIA. The trade right now, as you look at NVIDIA, is pretty much prognosticating about a $14 or so move for earnings coming out. So if you look at the money straddles, which is simply the same strike, put, and call for the weekly expiration, the August 17th weekly expiration. I mean, you take a look at the 260 strikes. I mean, you can see it's like $15.85, $16 more or less. Give a couple days of time, but they're pricing in a $14 move on NVIDIA. So, I mean, 260. You figure if it gets up there, that's what it's calling for. I think that in this case, selling premium in the expectation, because the implied volatility, to be honest with you, is not as at 72 on the weekly options versus the 52-week historic is 57. The 52-week implied volatility is 60, so it's only about 12% greater than its actual 52-week high. So it's not like a double. It's not like 52-week high was 60 and this thing's like 120, right? So the implied volatility, I think the pricing here is a little excessive for the volatility what the market believes. So therefore, I think there's probably a bullish bias to the upside, but it probably is not going to see downside action, and it'll stay within that $14 range. That's my analysis on what I'm expecting for NVIDIA's earnings based on some of the technical tools we use around here. Other than that, gang, I think what this summertime has brought us has been kind of an interesting time period. The summertime started right after the unemployment report. I don't know if you guys remember, but we were seeing it. July was a real active month in the market, and all of a sudden we had that employment number August 3rd, and since then, last week it was slower than molasses. This week, besides the volatility in crude oil, the big slam down yesterday and the big recovery, and then today's big move down. And by the way, let's take a look at our crude oil position right here, and you'll see, look what it did. Beautiful. I mean, I wanted to point that out to you. It knocked out the trade. So as you can see, it did two things. It maxed barred out of the trade, so it had in a short position, and it had a last conditional change, and it did its job. It got out, and it trailed the stop beautifully. I don't know if you can trade much better than that, and this is what an Algo optimizer product is and the genius behind what we've created with this, because when we get these moves, yeah, maybe it would have been great to stay with both positions, but shoulda, coulda, woulda, right? It did its job, and that's why we leave this on with a minimum of 2 contracts. Anyway, that's the position with the crude oil. Here's the position with the S&Ps, which is pretty wild because it is still long one, and we have a kind of this beginning phase of breakout. I'd like to see a little bit more positive volume on our volume indicator, and that would be kind of a nice thing, because if this is a trend consolidation and breakout, I would anticipate at least the move to get back up into 2750, and I would certainly appreciate if the Algo optimizer continued with a long position, which so far it is. Anyway, what we're focusing on right now for everybody, gang, and for you, if you think you want to hone your skills, if you think you can take the time, this is what I think every trader should do. Take the time to work on yourself. You know, the indicators are there, but how are you in accordance to the market? We did a webinar last week, and you can find this at personsplanet.com/summer school. That link right there, personsplanet.com/summer school. We're putting together what I consider is a very important, what I've learned through my almost 40 years in the business of preparing my mindset, whether it's for positive affirmations, whether it's having a trading buddy that you share your log with, right? It's like coming out and going to confessional saying, here's what I've done, and having someone that you can sound off your trades and be accountable for the trades that you've taken, win, lose, or draw. What we're doing is we're getting everyone in a complete mental and knowledgeable refresher course. Everyone's going to have access to our 3-day seminar, which was was almost $1,000 in a day, system that described everything about person's pivots, everything that talked about the high and the low closed doji system, different indicators to use to hone your skill on that. And then we're going to get together 2 Saturdays, 2 hours apiece, that's 4 hours, and we're going to go through a checklist of the mental game. And now, I think this is some of my best stuff that I have rarely shared out with the public, by the way. And so we're going to sit there and help people with, maybe there's a trader's block, if that resonates with you. A lot of people have like, man, they're forcing trades when they should say, this is not the best trading environment for me. Don't force a trade. In the meantime, this is something I would sincerely, I mean this, take advantage of spending time with me and getting your emotional house in order, your technical trading house in order, and take advantage and come join us in our summer school session. And you'll find all that information right here at personsplanet.com/summer school. I wish you well until the next time we get together and share with you what we've put together for the Algo Optimizer. That's just what we're up to here at Persons Planet and how things are shaping up for us around here in our trades. Thanks for watching.